Hello and welcome to The Print. I'm TCA Sharad Raghavan, Deputy Editor. And now US President Donald Trump has come in and he's already, right off the bat, he's announced several tariffs. He's announced the creation of a new body that will look at external taxes, the External Tax Service. And now he previously has threatened a lot of tariffs on countries like China and India as well. Those haven't yet been announced, but they're likely to come about. So, what impact all of this is going to have on India and on China and the trade between these two countries? To discuss all of that, we have with you Miss Trinh Nguyen. She is a senior economist covering emerging markets in Asia for Natixis, which is a Hong Kong-based a company that offers investment banking and research services. Before that, she was an economist with HSBC. But apart from that, if you follow her on Twitter, you will see that she's an avid India watcher, and she has a lot of insight about the Indian economy. And it's all really, really valuable because this is somebody sitting outside looking in. So thank you so much, Ms. Nguyen, for joining us.
Thank you for having us.
Absolutely, it's our pleasure. And okay, so I'll start off with a few data points. Uh, so China makes up about 15% of what India imports, but it makes up only about 3% of what we export. And this it's a wide imbalance. So do you think that this imbalance is set to continue, or do you think that it's going to shrink a little bit?
Well, I think this imbalance it's due to three factors. One is the fact that China prioritizes the industrial sector, and therefore they're much more efficient. And the fact that they've been essentially the share of the U.S. has been reduced, they have to reroute it everywhere else. And India is a big country with a lot of demand, so therefore you have this growth of Chinese exports to India, right? That's growing. The second aspect, of course, is really whether or not India is producing enough for its own domestic consumption. And the second thing is whether or not in this juncture it's a competitive globally. And I think the data shows that it's not producing enough for its very large domestic demand, right? Because therefore it's importing a lot from China. It has a trade deficit, and the trade deficit with China is greater than $100 billion. And the trade deficit is not just in high tech, right? So if you want to target, for example, ICT, which is internet communications, basically the electronic sector. Of course, if you don't have the whole value chain, you have to import something. You have to import intermediates so that you can then make the handset, right? So if you were to think about it like that, then some imports are actually absolutely necessary, and you must take some in order to industrialize and move up in value chain. But India doesn't just have a trade deficit with China for high tech; it has it for medium tech, and it has it even for low tech, for labor intensive, right? So basically, it
Right.
has a trade deficit with China in all segments, and I think that goes to show that there is something amiss here. The GDP has grown very fast nominally, right? So real GDP has grown, plus there's inflation. So nominal GDP has grown very fast, but the manufacturing and the industrial sector hasn't grown as fast, right? It has been growing, but hasn't grown as fast. So on a relative basis, actually, manufacturing has been shrinking in size as a share of GDP. And you can see that reflected in this trade figure, right? This trade figure is that as a result of the manufacturing sector shrinking as a share of GDP, it has to import from China, who is a big trader and a big industrial power. And not only that, it can't meet its own demand for these goods. So therefore, there's not a lot of room to also compete with China, and not just China, but other countries in Southeast Asia and the rest of the world in the global markets. One way to see that is the textile sector, right? India is a country that should be competitive in labor-intensive manufacturing because
Right.
it has a lot of people, right? And this is a low skill sector, and you have high formal informal employment. So therefore, you would think that that would lead to it to be very competitive, but that's not the case.
Yeah, absolutely. And now the thing is, it's been several years since we decided not to join RCEP. And the fear then was that the RCEP grouping is going to be led by China and is going to lead to rising deficits, and that we're going to be uh, a little bit like a trading colony of China. But since then, the data is showing that that's happening in any case. So, do you feel like how do you now assess our decision not to join RCEP?
Well, trade liberalization is one aspect. So there are many ways you can be competitive, right? You can be like, so trade liberalization is what I call soft infrastructure. You need to open market access. RCEP basically doesn't, if you look at the existing ASEAN's joined it, a country like Vietnam, the existing trade infrastructure, it actually doesn't really add a lot, just added a few more countries other than the ASEAN, already 10 countries plus the countries that already has FTA. So RCEP is much bigger than it comes out to be. But the fact that India is not part of it, it just reflects about the fact that there is this fear, right? If we open up, then we're not yet ready, and there's a flood of goods come, but they come anyway, as you mentioned, right? So
Right.
which one would you fear more? And how would you go about in terms of doing so? What is the policy priority in terms of industrialization? And I think from that point of the view, there has been greater emphasis by the Modi government to focus on made in India, but the emphasis has been on only a few sectors, right? It says that it does a lot of sectors, but if you look at the budget clearly gives out to a few sectors, right? You follow the money, right? And the money is only in the few sectors. Semiconductor gets some within, so it has its own budget, and within the PLI, then it's allocated to like pharmaceutical. It's allocated to things like, again, another high tech, and auto, etc. Right? So I don't see anything. I'm not against that. I do think as a country like India, it should grow in all sectors. But if you think about the bang for your buck and where you're comparatively advantaged, I think it would be on the labor force that has a huge number of people, and these people can be a source, a supply, right? And they also a source of demand, right? As you can see that in the import demand from China, it's quite huge, right? And the import demand is in all sectors. I get this a lot. I get when I say that India should do more, and I don't think it's trade, even tourism, right? The visa situation to get into India, there are countries where it should have visa exemptions. If you compare with China, it recently allowed a lot of countries to go in visa free. Poland, a lot of EU countries, etc. Japan, right? It has a very similar situation like China, where it's a really big country with and so on and so forth, with security issues. So I do think that there's a lot of liberalization, a lot of outward, growing outward to grow, right? To not just because there's this idea that India is big enough because it has 1.4 billion growing to 1.6, and subcontinental in size, that we're big enough that we don't need to look outward. And the demand here is enough to be fueling growth because nowhere else has such growth, right? But what is clear is that there is growth of demand, but there's not enough growth of supply. So there needs to be more of that happening. So my argument is that if you look at the juxtaposition of this, is a country like Vietnam, which many people, which has been a huge winner of U.S.-China trade war.
Right.
And some people say that, well, Vietnam is just a place for China to reroute, and that's absolutely not true. GDP per capita has increased substantially to 4,500, almost 5,000 now. And not only that, if you decompose Vietnam's trade, the number one item that China exported to the US was telecom in value, right? Basically, it's mobile phones, right? And so on and so forth. And
Right.
and that has declined in more than double digits decline in market share to the US since 2017. And Vietnam has picked up more than double digits. It actually gained 11% market share to now 15% of total US imports. Now, if you decompose that to where Vietnam imports the same item from, the products, right? China, North Asia, Japan, and so on and so forth, the rest of the world, that level of import has actually declined, right? So what does that tell you? That tells you that actually it's not merely rerouting; it's adding market value, and it allows ordinary Vietnamese people who are very low skilled to have a regular formal job that they go every day. That's pretty high earning relative to what they would have done selling knickknacks on the sidewalk, and able to contribute to pensions and so on and so forth. So it creates an institutionalization and formalization of jobs, so to speak, like taking people from farmers to factories. This similar story. Now, I do think that India needs that. It needs that because, as you know, and more aware than anyone, there's a huge labor market problem. And formalization has taken place in India, but the ratio remains very low, 10% ish. Some says 12%, but either way, it's too many people not formalized, not earning enough. And the fact that the grain subsidies program is so large tell you something.
Right. But so, are there any particular things that Vietnam has done that India can learn from? Because, I mean, this is a problem that our policymakers are not blind to. They know that this is what they have to do.
Absolutely. So I would say that for Vietnam, very similar to India or any emerging market. Actually, Vietnam is not even emerging; it's frontier. So according to MSCI, it's even like one below. But that's a technical thing, right? It's more about global markets rather than real economy. But the reality is that any emerging market, a frontier market, has challenging investment complications, right? Red tape is normal. Challenges, in terms of the difference between what central government says to do and then what happens at the provinces, or in India that would be how it happens at the state level, right? Now I think the key difference here is, I would say, priority. So it would, for Vietnam, it prioritizes three key sectors. One is ICT, the other one is labor intensive, like footwear and textile. There's and within that, they basically find something that low skill people can do and something that Vietnam can do well. And ICT, very similar to India, they have an affinity for mathematics, right? So they see that this is a sector they can do well, and it's high value, right? And obviously geographically close to China. And so what does Vietnam do well? It makes sure that the big projects that they try to attract first, they're very aggressive in attracting them. And the projects that they try to attract, they try to make it successful by making sure that they get whatever they need, right? Whether it's land acquisition, whether or not even a place in the airport to make sure they're able to ship things in and out. So the infrastructure, right? So you can have things have improved quite significantly now, but in the early 2000s, when you talk about Samsung Electronics, when they wanted to build and they were able to get them land, right? The land they need, because for industrialization you need a huge land, and then also the roads connecting that, right? Infrastructure may be poor elsewhere, but for that particular project, it was going right. And even a dedicated place at the airport, terminal at the airport, for just to be able, even during COVID, right? There was a lot of restrictions, but the people that were able to enter and exit Vietnam easily, even with the restrictions, were the Korean engineers, the people that work for these firms, right? So I do think that you have to talk, when you talk about all the things that went right, and I mean, there's people that do this full time that can explain to you, but I would say the key is priority. You have to prioritize something and make sure it's a success, right? For it to succeed, and at the government level, you can do that. You can put all your will behind that. And because why is that important? It is important because these big industrial producer, they not only are they huge, but they also carry with them an entire supply chain. So one is a PR
Right.
exercise, but two, it says, look, there's a big company called Samsung Electronics. They do so well in Vietnam. Well, I mean, in China. Why did they bother moving here? And they did, and it wasn't a huge catastrophe. It worked out so much that now they produce more than 50% of their mobile phones out of Vietnam. And now actually it has a concentration based in Vietnam, right? It needs to diversify. That's why it's looking to go to India. But the thing is, it's a big success, and that signifies to other Korean. So when you think Korea, you think Samsung Electronics, and other Korean firms started coming, right? LG, so on and so forth. Like and the suppliers of those firms started coming, right? So you start having what we call linkages in supply, deepening of supply chains, right? And beyond that, so I would say reduce the barriers to production, to setting up shop and making sure it's a success, and having policy priorities, right, to make sure that that happens. And of course, in the short term, you can't really change an entire country's infrastructure. You can't change the country's laws. You can't change things over the short term. But there are things you can do that can bypass the roadblocks in the short term. And I think one of the challenges that Vietnam has now is really how to make sure that this isn't just a Samsung Electronics story, but that the Vietnamese firms are more integrated and they're able to tap into the supply chain from packaging to just more the inputs, to the mobile phones, more the intermediates, right? And that's something that I think the current government is trying hard to do. But and we shouldn't say that just because it's in the beginning, all you do is assembling, that there is no value add. If you have low skilled people that need jobs, right? And the country is unproductive and you don't have enough capital, your private sector doesn't employ enough people. Attracting that is a stable source of employment, an opportunity to be part of these competitive firms that can be globally competitive, right? So if you somehow can tap into supply chain, you can actually over time learn how they work and how they can be very, very competitive. And most importantly, it's a source of capital, a steady source of capital that anchors many things, right? So they can just start having institutional savings through retirement funds. You can have liquidities for your banking sector. So Vietnam in the 2011 was undergoing to a huge banking crisis, huge liquidity problems. So dong was depreciating all the time. Liquidity is important. Like when you're hand to mouth, these things are important. So in the short term, it may be this provider of stability for so many of these solutions. And this is why I'm a huge advocate of gradual approach to development, and which sector of the capital account should you liberalize first, right? Whether or not liberalizing the portfolio, which is basically foreign investors, instead of setting up shop in your country, they're just buying stocks and bonds, right? They're buying,
Right.
and another way to invest is that they actually take, instead of buying just the securities, they take actual stake into the country. They call it, and building factories. They call it greenfield. And
Right.
another way is to actually enter through M&A, which is actually buying a domestic asset, right? Or joint ventures and so on and so forth.
Yeah.
So I would say key number one to Vietnam success was that, and because it is a priority, so it also, the second thing I think it's done well, which is something that you already mentioned, which is aggressive trade liberalization, right? So you make it a lot easier to do business in your country. The second thing is you make it so that you want to be located there versus somewhere else. So you want to reduce the hurdle to exporting out of Vietnam. So lowering the tariffs that people have on a country like Vietnam, right? So it has the EU FTA. So if you compare the countries that Vietnam has trade um, of liberalization with, which is like the share of GDP, and then versus China is much higher, right? And so trade liberalization is helpful but it's not the only thing, right? And many other factors. But I would say the number one key of all of this is policy priority.
I understand. And so now you're not in India. You're based in Singapore right now.
Hong Kong.
Oh, you're based in Hong Kong. Okay. So now, what is the view of India from the outside? Because I mean, what's happening? What the data is showing is that FDI into the country has been at a reasonably high level, but kind of stagnant for the last few years. But the money that's been flowing out of the country has been increasing over the last few years, and Indian companies are also investing abroad much more. And domestic investment isn't really happening with enthusiasm. So I mean, what is the view? Is India considered a tough place to invest in?
Well, first, India growth is slowing, but it's still slowing to a high level, right? No, it's like in the 6-ish%, right, versus like 7, 8, or 9. And you add CPI, then its nominal GDP is still double digits. So it's a very high growth environment. The return on capital is very high, and it's expected to be much higher growth than elsewhere for a long, long time. That being said, in the equity market, it's very priced, right? It's price perfection already. In fact, the pricing of it's maybe even higher, right? So that's why there's a bit of a repricing of Indian equities recently. Is that people had expected not high or 6-ish, but maybe they had expect 7 or 8, right? And so now they're kind of recalibrating. And I think the next question next is that, so we have a cyclical slowdown. How long is the slowdown? Is it going to be just a few quarters? Is it going to be a few years? When is it going to go back to the 7 and 8%, right?
Yeah.
In real GDP growth. And that question, I think, has a lot to do with the policy direction the government will take. Also the external environment. I think that a lot of the outflows you're talking about is really short-term portfolio flows. They go in, they go out. The
No,
and
I
INR
was
has.
I was also talking about the direct
Our,
investment, not just
yeah,
the.
our FDI, right, like offshore. Yes. Yes. Is India a tough environment to make money? Well, it depends on who you ask and which sector you're in, right? And one way to see it is in the capex, overall capex. Capex has been growing back since COVID for some of the key sectors that have been doing well, infrastructure, energy, and so on and so forth. But for a lot of sectors that haven't been increasing, and these are already the big companies, right? In the Nifty, if you talk about the smaller companies, they haven't been growing as much. So I do think that some certain sectors are not doing as well as others, right? And in particular, I think even within manufacturing, there's divergence as well. So I think it's going to be a challenging bit. They're going to do whatever they can to support it. I think the RBI is probably going to cut rates in February. My view is they're probably going to cut about 100 basis points. Fiscal policy, there's a fine balancing act here, right? Given the slowdown, will there be a big fiscal expansion, and how will they finance it, right? Because if you do fiscal expansion, then you raise taxes, then people feel tight, right? There's already a lot of complaints about higher taxation already. So what is the government going to pull out of the budget bag in February, right? So I do think there's a lot of big questions, and I do fundamentally think that they're committed to fiscal consolidation. And the government is taking a step back. If the government is stepping back in terms of, it's been a key driver of growth in basically recent years. And if it's taking a step back, will this private sector take the baton, so to speak? And what would it take for it to do that? And I think one of the things that India can do, and the government can do, is make prioritizing more the sectors that are low hanging fruits, sectors that it already has competitive advantage, labor intensive, for example, and removing some of the red tape that makes it very difficult to scale up in India, land acquisition, labor, and so on and so forth. So I do think that there are things that they can do beyond just continue to grow expenditure in India. All right. But I do see that the cyclical slowdown is happening, and it's a challenging environment, given the challenging outlook. But growth is still going to remain quite firm, just because it has a lot of room to go. It has a lot of run rate still.
Right. So, I mean that sheen of the fastest growing major economy in the world, do you feel that that's still intact?
Absolutely, I do think, and I think that the sectors that can grow are really the private sector and the household sector, right? So if you look at India's balance sheets, right, the government sector is very large; it's the largest, right? Government debt is the biggest, and corporate debt is much smaller, and that's very different than other countries, right? Where usually you have the reverse, where you have a larger private sector debt than government debt. And so I do think that the government can reduce its scope in the economy, and one of the ways they can do that is to make it simpler to do business there, right? To streamline a lot of the laws. The labor laws are very complicated. It's very difficult to scale up. The fact that you have to involve the government just to fire some people over a certain number of size of employees is highly problematic for a country that has 90% informal employment, right? So the question is, so I do think that there's a lot of room for reforms here.
Okay, great. But on that note, thank you so much for this very, very insightful discussion. It hopefully policymakers are watching. The budget's coming up, but thank you so much.
Thank you.